So we've heard a lot this morning about the tremendous implications of Bitcoin and blockchain technologies for the financial center. It's time to start turning our attention to other business applications, but we also want to consider the social applications or implications of blockchain. Jalak Jobanputra, the founder and managing partner of Future Perfect Ventures, was an early investor in the space, and as you can see, she tragically broke her ankle. So she is going to go and deliver her speech seated, and then I'm going to join her as well for a seated conversation just afterwards. Thank you, Jalak.
Thank you. Okay, great. Great to be here. And yes, I would miss this given the great lineup of speakers we've already heard. So I'm going to take a step back. I want you to imagine a world where only 2% of Africans have a mobile phone, where 0.5% of people in India have any access to the internet. And now I want you to imagine a world where 80% of people in Africa have a mobile phone, and 35% of people in India have access to the internet. We don't have to imagine that world, because that world is today. In 15 short years, we've gone from very little connectivity in the world to unprecedented connectivity. I mean, I remember as a child, I was born in Nairobi. We moved to the States when I was young. Would go back to India and Africa on a yearly basis. And if we wanted to call back home, we would have to reserve a phone line with the operator. The operator would call us back at that prescribed time. And sometimes the line wouldn't be great, or we would get cut off, and we'd have to go through that process again. And we've gone from that to being able to connect to anybody, anywhere in the world through our mobile phones, through IP networks. And the mobile phone and the internet has allowed us to not only have that phone connectivity, but as we'll hear later too, enable financial inclusion. I'll talk a little bit about M-Pesa later. And allowed us to monitor elections around the world and use text for public health messages in South Africa and reach people that we wouldn't be able to reach otherwise. Give children access to information in a small village in Guatemala. More information is now at our fingertips in our phones than NASA had. More computing power is in our phone than NASA had when they put a man on the moon. So pretty phenomenal connectivity. Now I want you to imagine a world where 63% of women still don't have a bank account. A world where 1.5 billion people still don't have any formal identity. Only 29% of women in India have access to the internet. Connectivity has not solved everything. While we have 80% connectivity in emerging markets, in developing countries, mobile, we only have 55% of those same people connected to any formal financial services. And this is why, I believe, and there's been talk earlier today about why now, why are we talking about blockchain? This technology has in some form or another been around for a while. Why now? I think we're seeing a perfect storm of technology, of market conditions, of data being collected that actually make us start thinking about what's next? This connectivity has been phenomenal, has led to increase in GDP, but it's also led to a lot of fraud, a lot of hacking. Our personal information is no longer secure. We may have more conveniences than we used to, but we're paying a price for those conveniences. However, we now have a sub $30 smartphone available. That price just keeps coming down. We have, as I mentioned before, tremendous computing power available in small devices. We have billions of sensors that are coming online in devices, machines. And we have a lot of data that's being collected. We're leaving all these digital crumbs everywhere. There's a negative to that, but there's also a positive where we can now analyze this data that can benefit all of us if we create the right applications to benefit all of us. So as a VC, I'm always looking at the next stage of technology and what's next. And I've been in the technology sector since the early 90s. I've been a venture capitalist since 1999. And when I first got into the technology sector, we were talking about software and hardware. We saw companies like Microsoft, like Intel, Sun emerge from that era where people were now enabled at terminals to be able to do things that they weren't able to before. I mean, when I applied to college, I did my applications on a typewriter, which these millennials that I invest in these days can't believe that was actually in their near their lifetimes that happened. And then I remember when I went to college, I started using a word processor. And then when I started investing, that was the early days of the internet. And we often say, and I believe this, that the blockchain and this decentralized connectivity reminds me of where we were with the internet in the mid-90s, where we're starting to see the infrastructure being laid, and then we need to develop middleware and applications and figure out the protocols around this decentralized connectivity. But it maybe took 15, 20 years for the internet to get there. I think we'll be doing this much quicker in this decentralized world. And with the internet giving rise to mobile and cloud, and these companies that we consider revolutionary right now, like Uber, like Airbnb, Amazon, Google, these companies are still intermediaries. They're still collecting our data and utilizing that data and charging large transaction fees for us to interact and use their services. Now, those transaction fees may be less than what existed before, or they're new services and business models that didn't exist before. But I don't believe we're at the end of innovation. I think we're at the beginning of innovation. And we'll look back one day with these companies and think, gosh, that was quaint. I can't believe we did that. We gave away all of our data and all of our information to these companies so they could retarget us with some pretty awful ads. So I'm very excited about where we are. And if I were to say where we are in this graph is in the very early, in between this internet and decentralized connectivity phase. And all of those nodes that you see up there are people, they're machines, they're micro marketplaces that are going to be enabled by allowing people to be their own Uber driver, where we can, or a driver can actually decide, who they want to do business with. They can provide their information, and then they transact directly with the end user instead of going through a centralized intermediary. And I believe the value creation is going to be a 10x of what we've seen happen with the internet age. And that's why I'm very excited about this as an investor. And as exciting as blockchain and decentralized connectivity is, I also believe we need to look at it in conjunction with other technologies that are now evolving because of the data, because of the sensors I talked about, evolving to the point where we can use these in conjunction with each other to then create new business models in different verticals. So we saw the media sector, education, finance, healthcare, all of these industries were changed by the internet, disintermediated in some cases, more better services available in other cases. And so when I look at what's going to be possible, it's going to be the conjunction of all of these blockchain, Internet of Things, machine learning, interactivity, the micro marketplaces that are going to create the business models of the future. And I have security in here too, because I think the on-ramps and the off-ramps to this decentralized connectivity and the security of the data is going to be paramount, and that's an area that we still need to solve. So in the future, I believe we're going to live in a world that's very customer-centric, that's peer-to-peer, where we're going to be able to access and control our data from any device, where we're not going to leave people out of the financial system or the healthcare system because it's just too expensive to reach them, which is the case now. I mean, there are some countries where 85% of the rural population doesn't have financial services because the banks have decided it's just too risky to lend to them. And they don't trust this person on the other end to repay this money. These people don't have collateral. And I believe technology like the blockchain is going to enable us to say, okay, I know who that person is. They've given me this data. I can trust that they'll be able to repay within a certain amount at this rate. And by the way, I can distribute the capital to them through a distributed network, that mobile phone that isn't going to take a large fee to get to them. I don't have to go through 3 or 4 banks to get to them. And I believe we're going to live in a world where we're going to get to close to 100% financial inclusion because the cost of doing business with people who are considered high risk, and by the way, they probably are not high risk, they just don't have the data to enable us to trust them in the traditional way of how we view trust. I believe that we'll be able to reach the whole world in a way, in a form where the internet left off. So I really do view the blockchain and decentralized connectivity as the next internet, because there is so much promise of the internet. It fulfilled part of it, but there's a long way to still go. And I believe that blockchain will help us get there. So when I started investing in the Bitcoin sector, now broadly the blockchain sector 4 years ago, about the time I started the fund, I wanted to look at companies, entrepreneurs, applications that were taking advantage of the unique properties and characteristics of Bitcoin and blockchain and Ethereum and these new decentralized technologies. So I looked at identity, transparency, immutability, which enable lower fees, better data analytics, more data that's being collected, but more secure data that's being collected. And the portfolio that I now have is an exciting one that is really forging the way of creating new and inclusive business models. And a lot of people often ask me, well, how are these companies going to make money? And by the way, some of them are beyond just proof of concepts. But it reminded me a lot of people asking how, an e-commerce company was going to make money in 1996. Well, no one's buying anything on the internet, so how are they ever going to make money? I mean, how is Amazon going to survive? These companies evolved, and these entrepreneurs are smart and at the cutting edge, and it sometimes takes the rest of the world some time to catch up to a lot of these technologies and newer business models and ways of looking at things. So companies like BitPesa, which was just referred to in the last panel, which is formed in Kenya, now in 6 African countries, integrating with M-Pesa in Kenya, but offering a more open, lower cost network than what M-Pesa has created. M-Pesa was still created by Safaricom, a mobile operator, a large company. BitPesa now lets Africans transact with each other at anywhere from a 2 to 3% transaction fee versus companies like Western Union that can often charge up to 15% for some inter-Africa remittances. So the amount of capital that is now freed up to go back into the global economy is significant. Companies like blockchain.info, which is the largest Bitcoin wallet in the world, they are in 140 countries. HSBC, which is considered one of the most global banks, is in 40 countries. Blockchain.info took only 13 more months to reach 100 million transactions through its network than the entire Bitcoin network took up until 2015. So the progress, the scale, the global nature of these companies is unlike anything I've seen before. Abra is doing global remittances, started off in the Philippines, also enabling tellers on the ground to become smartphone enabled. So they are able to create their own micro marketplaces through Abra to determine what fees they want to charge to people who are cashing out remittances on the ground. So they are allowing these tellers who had no choice before on what their fees would be to set the market, really empowering people on the ground. They recommend a 1% fee, but I feel like this is true competition where we're getting to a point where the best are really going to be able to rise. And we're also going to see more equity in the way that capital is distributed, the way information is distributed, and how we are going to be able to take control of our data in the future. And with that, I will end the talk, and I appreciate the conversation. Oh, yeah.
It's okay. I'm going to ask Jalak a few questions, and we'll take some questions from the audience before lunch. I absolutely take your point that these systems will place more control in the hands of customers, that they will promote equity and innovation. But I'd be interested in understanding some of the challenges in bringing these technologies to non-financial sectors. So what did you learn from the healthcare industry's resistance or uptick for blockchain technologies?
I'm sorry, with healthcare. Yes. So healthcare is an area where I believe there's a lot of potential. And just in the last 6 months, we're seeing more and more hospital systems and insurance companies start to dig around this technology. I think anyone who's worried about being disrupted is educating themselves on what this technology means. Now, when I think about healthcare, I think about electronic health records, right?
Yes.
And that's where, I want to be able to access all of my records at my fingertips and then be able to permission out whichever data that I want to. And sometimes it can be for clinical research. Sometimes it could just be to a new doctor or hospital, but I want to be able to control that and have access to all that. But there are a lot of entrenched interests. I mean, if you look at Practice Fusion, you look at all of these EHR companies, I mean, this is their business. So I'm not sure EHR is actually going to be the first place where blockchain is actually implemented. I look for more wedge cases where there's an example of a company that is looking at, because we're moving to value-based care, there's this concept emerging of bundles in healthcare where hospitals and care providers will get reimbursed in one bucket, and then they have to decide how they're going to split it up between in hospital, then post-hospital care in a nursing home or home care. And there's no audit trail right now around that. So there's a company out there that is getting this information on the blockchain. So there's an audit trail, and they're not talking about the blockchain technology. They're just talking about it in terms of an immutable audit trail.
What would it take to put physical assets onto a blockchain, and why is that such a crucially important thing to do to prove the technology?
Yes, and I ran out of time, but Everledger is one of my portfolio companies, and I believe, they have a strong partnership with IBM, so there's going to be some conversation about that. But Everledger started off getting diamond information on the blockchain. So they now have over 1 million diamond data on the blockchain. Each diamond has 40 data points that they've discovered will create a unique thumbprint identifier for that diamond. And so they're using a combination of computer vision and machine learning and blockchain to get that information onto the ledger.
And does that change the diamond market in interesting ways? I think we heard earlier that it eliminates blood diamonds, but does it allow new forms of derivatives around the diamond industry, futures markets?
So the physical asset verification on the blockchain is very interesting, because then you start to think about how you can start to securitize some of these assets. And then again, it's about access. So right now, I don't necessarily have access to invest in certain commodity markets, or it would be, there's high minimums to do that. Where if you can start securitizing these assets and then breaking it down into, securitization has a negative negative connotation because of what happened in 2008. But if everything is auditable and you're actually getting that particular asset, and that's the asset that will be traded or sold, then it opens up a lot of new ways of investing in physical assets.
Bad securities markets have a bad connotation, but that might be really interesting. It might create entirely new diamond markets.
Yeah.
We often say about emerging markets that they can sometimes leapfrog Western investments and infrastructure. So we move to M-Pesa and distributed banking on mobile networks. Africa might move to microgrids in the solar space. Is it possible that nations with dysfunctional banking systems might be early adopters of blockchain technologies?
Yeah, I mean, there's this concept of regulatory arbitrage where often, there are these pockets in the world where regulation is may not be as strong, or maybe a little murkier. And those are great test beds. And I look at the healthcare space and even non-blockchain innovation. There's a lot happening outside of the U.S. Just similar to what happened with the financial system and M-Pesa and mobile money leapfrogging. What's happened in the developed world. We're seeing that with healthcare and telemedicine, and how do we reach these people that have there are very few doctors for the populations that exist, and not as much regulatory oversight, and so medical devices that require FDA approval here don't require any approval in some of these places. So I believe, the future population is in all of these markets. The bulk of the growth is going to be in these markets. And so it's going to be a combination of technology and great minds in places like the United States with those markets, and the great minds that are now, getting educated and have more access than they did before in these other markets. And I think it's going to create a better world for all of us.
Let's take some questions from the audience, please. If you'll bring up the lights in the second row, please.
Jalak, I read not so long ago that VC investment in the blockchain area has decreased in the last couple of years. Is it true? What are your thoughts on why that is, and what's the general trend?
Yeah, I don't know whether I've seen those numbers, but I wouldn't be surprised if that were the case. I mean, often in VC investing, what you see is a lot of money going into kind of a first wave of innovation, and then a slowdown as we see where some of these companies start to do well and where they're going to get some traction. I'm an investor in Blockstream, and their Series Seed round was a $20 million round in 2014. About a year later, they raised $55 million. And so that's a lot of capital, and that capital needs to be absorbed by these companies. And even though they're at one of the companies that are at the forefront of building out the side chain infrastructure and all of the off-chain infrastructure, it still takes time to really build a lot of this out and absorb that capital. So I think it's a natural evolution. I never like to see too much money going into any market because, like I said, it's the capital may be available, but it's really getting the human talent and the business models working that often takes longer. So it's just it would be a natural result of the market.
You make VCs sound like they pursued fashionable opportunities when they were, in fact, a limited number of teams and technologies to invest in. From Ericsson in the front.
Hi. So you'd earlier spoken about how credit access is not something that's accessible to people who don't have collateral, right? So Dr. Yunus with the Grameen Bank and the MFIs tried to address that. So do you see sort of maybe solutions that maybe they're already there or they're coming up that are these spontaneous micro markets for people like myself, let's say, or any individual to lend credit to people who need it?
Yeah, so I mean, you make a great point where there are a lot of informal markets that already exist, as well as formal markets through MFIs that exist. So that's why I look at blockchain in conjunction with technologies like IoT, like machine learning, because a lot of the credit worthiness now is assessed by data analytics, right, until a person builds up a credit history. So I think it's going to be a combination of technologies, but being able to formalize some of the informal activity that's happening and be able to track that and audit that, I think will be beneficial to the industry. And MFIs have just recently started doing distributions on mobile, and it's taken them a long time to get there, and a lot of them are looking at this technology and how can it benefit them and offer data and interoperability between different MFIs.
One quick question, and then I must get you all to lunch.
The altcoin market's been going crazy lately. How much of that money that's going in there do you think is VC money, and do you have any favorite altcoins that you like?
You should explain what we're talking about.
Yeah, well, the altcoin, I mean, Ethereum, Bitcoin are coins, and there are a number of other
weird coins.
Yeah, I mean, I call them tokens, but I know people, who are highly technical cringe at that, at using the word token for these altcoins. But and they have different characteristics, and that's what I think is exciting about where we are right now in the evolution of the sector, because we've seen some of the drawbacks of Bitcoin, and scalability is one of them, and I believe we're going to solve for that, but because it's a consensus system, it's going to take longer to solve for that. So we're seeing some altcoins that are focused on privacy, and others that are more focused on scalability. I think I'm excited about a number of them. I think we have to be careful because we have to have them work at scale. And whatever that scale is, it has to work within, a certain use case. And we haven't seen that. We're just starting to see Ethereum start to get there. I think we'll see it probably in the next year. We'll start to see which ones actually have some uses, and where Bitcoin and Ethereum can actually solve for some of the things that some of these altcoins are solving for. So I think the next year is going to be pretty crucial to see where all these altcoins go. But I do believe that we're going to see a number of different blockchains, a number of different altcoins emerge, and then we're going to have to work on that interoperability layer.
Is it more likely that there will be a proliferation of altcoins with specific vertical uses with some kind of interoperability, or is it more likely that we'll add feature sets to Bitcoin and Ethereum?
Yeah, I mean, and that's what I was just referring to. I think the amount of it's not only capital, but I look at financial capital and I look at human capital that is going into solving for some of the issues and market conditions that we need to solve for Bitcoin and Ethereum, and so I actually think that they're going to become pretty robust in ways, just like the internet. We could barely fit any data through these pipes before, and look at what's going through networks now. So I think we're going to see similar evolution. We may see a few more altcoins emerge for specific cases, and I think these micro marketplaces and companies may create their own, but they're going to have very different properties than the public Bitcoin will or Ethereum will.
Jalak, thank you very much, and I'm so sorry about your ankle, and thank you so much for coming and hobbling on stage.
Well, thank you.
I'm grateful. Thank you.